So we're back together again with another episode of How to Make Money with Hard Money. And today we're joined by our guest, Kristian Negroni, VP of Commercial Lending at BayFirst Bank here in Tampa Bay. So welcome to How to Make Money with Hard Money.
Thank you. Happy to be here.
Yeah, it's good to have you. And also a friend of ours. So this will be a fun one today. Yeah. But we'll talk a little bit about the market, about your business and what you do and how that relates to the Tampa Bay area. So we'll get right into it. You can we were all talking off air a little bit about your background, and we know you went to Liberty College and you studied finance and Spanish, and so maybe you could give us a little background on yourself and how you got here.
Yeah, absolutely. Went to school at Liberty, as we were kind of chatting earlier. Played soccer there for a bit, and quickly realized that wasn't going to go anywhere. That was going to make me a lot of money, or any money really at that. So
New Yorkers and soccer players only on this podcast.
So I ended up changing my major. And actually, I cheated a little bit because I kept my major as Spanish. And I always had Spanish classes because I was fluent in Spanish. And I would take these Spanish classes in case I did poorly in another class, kind of help stabilize my GPA. And my major was also international finance. And so my advisor came up to me and was like, hey, if you just do your internship the right way or structure it the right way, you can double major and you don't have to take any additional classes. So I switched everything around, ended up doing a internship at my uncle's mortgage company in Puerto Rico. Went there for a summer. They basically just stuck me in the top second floor of their office, no AC, middle of July. And there were like just files everywhere. And they were like, you just have to sort all these files and get it organized. So I'm just up there just sweating, just doing. I was like, man, this is, I guess, what it takes, to just kind of work your way up. So I did everything and probably lost about 15 pounds, doing that. And then
that's not bad.
Yeah. So I went downstairs and I told my uncles I was done. And I had like this book that they had to sign for every day that I did work. And they signed off and they were like, hey, now you're done. You take the rest of the summer. So it was about 2.5, 3 weeks of work. But it was a great experience just because I got to experience kind of the mortgage business on the Spanish side, which obviously was going to be difficult for me to do just going to school, right? So It was a really nice way to bridge everything together. I'm thankful for it now, but I wouldn't make my kids do it because it was hot. I mean, it was hot.
And was there a big difference between doing mortgages in Puerto Rico versus
I actually never really got to do any of the mortgage business. They really just stuck me in this second floor and I was just stuck.
Office administration.
Yeah, file sorting, and I would kind of listen to like their conversations when they would take me to lunch and that kind of a thing. But it's, I would think it's not that much different than here, right? There's a lot of different rules in a lot of different countries, but Puerto Rico seems pretty standard in terms of that kind of a thing. So yeah, I came back and I was done, and it's been kind of banking ever since. I've not migrated out of banking since I started.
But you had a lot of migrations: New York, Virginia, Puerto Rico, North Carolina,
Puerto Rico. We moved to Worcester, Massachusetts. If you're familiar with Worcester, that was my first experience in snow, and I've always been kind of real independent kid. And I'll tell you a quick story. I have a twin sister, and neither one of us knew how to speak any English whatsoever. And so I was like, well, if they stick us in the school, at least I'll have, someone to talk to. But they said, nope, we're going to separate you and your sister. You're not going to be in the same class. So I had no idea. I had to teach the teacher how to say bathroom. I was like, I had to go, and they were like, I didn't know where to go. I would just look at the pictures, and sometimes they would. Right. So it was one winter, and they let the school out early because the snowstorm was so bad. And I was so overly confident that I knew the way home that I told my sister, I was like, I got this. I'll just walk us home. And she was like, no, we should wait for mom. We should definitely wait for mom. I was like, no, I'm not waiting. So I start walking. She follows me. We get stuck and lost in this terrible winter storm. And this group of, really angels found us. It was just this group of people that were outside playing, younger kids, maybe, 17, 18 years old. And they could tell that we had no business whatsoever walking around. And so they found us, took us back to the school. My mom's hysterical.
Oh, man.
And so that was my story in Worcester. And then my dad got transferred. We ended up in Rochester, New York. And that's kind of where I started, kind of really growing up my adolescent years. Then my dad got transferred again. And
so what was he in? He's transferred.
He works for a company, Bausch & Lomb, if you remember. They're still around. Contact lenses. He worked with them for quite some time. And then that company ultimately moved him to Lynchburg, Virginia, which is where I went to high school.
Yeah.
Where I went to college, we mentioned.
Yeah, I was saying my wife grew up in that area, and
Yeah.
they were like, her family's from like Alta Vista. I don't know if you know where that is.
Oh
in
yeah,
Virginia.
absolutely.
Alta Vista. I went to Virginia Tech. We lived in Richmond for a little bit too.
Yeah.
So
Central Virginia is a beautiful place.
It
You know,
really
you got
is.
the mountains. The fall time is just an unbelievable place. But you know, when we moved from New York, it was like, wow, it's warm and it's January. But then I was like, once you get acclimated to the weather, you're like, okay, it's still too cold.
Yeah.
And so I ended up moving to Charlotte, right when the banking kind of crisis was kind of going on.
So 08 time?
Yeah, and well, actually a little bit older, a little previous than that actually, but I guess more from the standpoint of 9/11 happening and a lot of the banking mecca moving towards Charlotte, North Carolina, rather than New York. I didn't want to move back to New York, and so I started my career there at Wachovia.
And then how did you get to Florida? What was the bridge there?
You know, actually, I was working for a bank, Fifth Third Bank, and my boss at the time was just kind of expressing the fact that the commercial banking division, the business banking division, wasn't really going to be something that they were focused on. I had some friends that lived down here, so I just kind of on a whim interviewed with a bank, with Wells Fargo, who had bought Wachovia. I had a really good reputation with Wachovia, having worked there and really excelled and done well and kind of working up through the ranks. So I remember sitting in the interview, and it was one of those, you fly in, you do the interview, and you fly out. The interview went so well that they were like, well, maybe you should stay a couple extra days and find a place to live. So I did, and found a place, and before I knew it, and now they were strategic because they had me come down in February. So it was beautiful weather, 70 degrees. I'm like, why am I not living here? And you know, you could see the writing on the wall in terms of what was happening in Florida, the growth potential, especially in this market.
What year was that?
This was 2011.
Oh yeah.
So coming out of the recession.
Great time to be coming down to Florida.
It was, you know, there wasn't a lot of banks here, but the banks that were here, if you got in with the right ones, knew what they were doing, knew that they wanted to be here. They were spending the right amount of capital to grow the teams here. So it was a natural, kind of a natural course of things. And then before I knew it, my parents moved here. My twin sister moved to Fort Myers. My younger sister moved here.
And you were
my little brother moved down for a little while. So I was like, and it was the first time that we had all been together since me and my sister, we all kind of went our separate ways. So having all that kind of organically come back together has really been a blessing, because I'm a big family guy, and having everybody close is really important.
That is awesome, man. And Caleb, as we were talking about, Caleb has the experience of through that 08. So it's really interesting. I have probably a couple questions from like 08 and then reinventing yourself to 2011, staying through the banking, because not a lot of people did that. A lot of people left the industry and reinvented themselves for a period. I know Caleb went through that period. We talked about Gretchen was with Wachovia as well at the time, who's on the team. So that's a good bridge to today's world, because that was a difficult time in the market. And, a lot of people will say we're in a difficult time right now, especially in commercial, in the commercial asset sector. So what maybe we could talk about the market right now, and what are you seeing in the commercial market?
Yeah, this year was an odd year. I look at 2022, and that was my first full year at BayFirst. And I remember, interviewing with BayFirst and really wanting to be with a community bank, a smaller bank that really, and one of the things that our CEO mentioned in one of my first meetings, he said, we want to meet customers on their terms. And I thought to myself, like, wow, that's a really powerful statement, but what does it mean, right? And how does it translate into actual action? And how does it translate into something that customers actually experience? And so I had a couple of moments where that was actually going to be tested. I had a customer that was with the bank that had some things, just a minor cash flow hiccup, really. They do very well, but something like timing wise didn't help. And so they were going to maybe be like $60,000 short for payroll. And so they came to me and they said, hey, we've got this problem. We think it'll be fixed in about 90 days. What can you do? And I was like, well, let me go back to our team. And before I knew it, 24 hours later, we had a $60,000 deposit in their account.
Wow.
And it was kind of like, that's meeting customers on their terms, right? That's
really
understanding the
people.
business model, understanding the risk, especially for customers of the bank. So, 2022 kind of led into me feeling very confident with the bank, because that was the first loan that I did with them, right? It's not huge, $60,000, but the impact that I have, and now those customers, I feel like will be customers for life.
Sure.
Yeah.
And so, we went through 2022, had a lot of success. And then 2023, my boss was, had been recently promoted, and he didn't necessarily want to take the job, but I was mentioning to him, I was like, if you don't do it, someone else is going to do it. And who knows who will work for, and he was like, all right, well, I'll do it if you're willing to work and be on my team. I said, no problem. And so we started Q1. It was just me and him in the Tampa market, with a couple of other people on the retail branch side. And we had all this momentum going into the year. And all of a sudden it was like, yeah, we're not really interested in that kind of loan. We're not really interested in that kind of loan. And we were like, okay, we need to understand.
And who are you hearing that from for the audience?
Yeah, and just credit, our credit folks, which, and
underwriting,
chief credit officers, chief lending officers, bank president, CEO. And so, there can be a sense of frustration that can happen. But instead of kind of taking that and turning into turmoil and disgruntled employees, we really just sat down and said, hey, what do you want to see? Help us. We can find the deals out there. Yeah. We're business development guys. We're in the community. We're super visible.
Give us the criteria.
Give us our box and we'll go find it. So they did. They're like, this is what we feel comfortable. And we push the envelope from time to time to see if maybe we can get a couple of those in there. But I think the biggest thing, going back to your question, is, despite what's happening in the commercial market or what has happened over the last 12 months, you build a lot of credibility with your credit folks, right? With being transparent. I always like to, identify the big hurdles first so that they don't come up and you kind of lose credibility by saying, well, did you even consider this?
Yeah. Or did you not know?
Yeah. Did you not know? Did you not ask the right questions? What's your process like? So once we kind of understood our box, things started picking up. Now it resulted in us having a less productive year than we wanted, but we were still successful in bringing on really good relationships to the bank. And what I mean by relationships is we try to stay away from the transactional side of things, right? Just that one and done kind of a thing. We want to build a relationship with the borrower. We want to understand your business. We want to understand your CapEx needs for the future, 24 months, 12 months, even 6 months out. Give us an understanding of what that looks like so that we can position our products and services in a way that are poised to give you success. And within the right types of credit boxes, you can have really good relationships. And then the relationship comes in with their deposit accounts, offering different services to the bank. And that's a natural byproduct of already understanding their business model. Yeah. So we had a lot of success in that. And it's turned out to, we had great Q4. We're going into Q1 with a lot of momentum. Yeah. I'll probably, close to double my production going by the end of Q1, Q2.
So one of the things I wanted to ask is, you speak a lot about that in the products. What is your ideal client at BayFirst?
Yeah, we love owner operators. We love working with professionals, as most banks do. Your doctors, your CPAs, your attorneys. That's kind of the low hanging fruit. Where I like to see the bank really excel in is kind of that C&I, commercial and industrial business, manufacturers, distributing. And you take a look at the economic landscape of the country, right? And you identify what businesses are poised to succeed and what businesses can you see kind of, hey, we're going to have a hard time in the next, 12 months. It doesn't mean you stay away from those folks, but maybe you tailor your products and services in a way that is helpful for them, but mitigates the risk for the bank. So, again, those are, we do often create promotions and different types of offerings based on the risk of that client. So with attorneys, CPAs and doctors, owner operators, understanding their business, we can maybe get a little bit more aggressive on the terms, rate, that kind of a thing. We do quite a bit of investment real estate as well, whether it be multifamily, whether it be, strip centers. We take a hard look at those, but we really like those opportunities to be in our backyard. We like to see businesses that are within the 9 surrounding counties of Hillsborough and Pinellas, and we focus our efforts there. Now, our SBA side of the bank has a national charter, so they have a much larger footprint. We can do deals kind of all over the U.S., but for the most part on the commercial, conventional side, we stick to the 9 counties.
So our audience too is very familiar with us talking about hard money lending. And, for us, it's the 1-year terms. It's the fast fast speed of closing, minimal requirements, no credit appraisals, liquidities, bank statements, none of that. It's collateral back lending. And so it's really interesting to have you on to give the audience a different perspective on the different types of lending that's out there, because we were talking about before we went live, there's a lot of actual chemistry between the two of us, as a lot of borrowers will use quick bridge loans for hard money and then try to refinance to more stabilized debt like that the community banks offer. So if you could, kind of relating it to hard money, are you seeing a lot of distress situations where borrowers do need to, get some quick financing, but then they're looking to bridge to longer term products that you guys can offer?
Yeah, we do see some of that. I think probably if I had to point out one major characteristic difference, and you mentioned it, right? You guys are collateral based. We're more cash flow based, right? So we take a really hard look at the cash flow of the business, understanding the operating cycle of the business, how they convert their services or goods to actual cash.
Yeah.
And then we back into the collateral piece. So to your point, if we have some distressed properties and you've got some borrowers that need access to the cash much faster than going through your typical underwriting process, that's where, companies like yours can really be helpful, right? Because it doesn't mean that they don't make money or they don't know how to make money,
right?
But it's kind of the cost of speed, right? Speed to market is always huge, and it's going to be huge in your world. It's going to be huge in our world. Right. So what we like to do, and I mentioned kind of meeting customers on their terms, is because we're a community bank and we have local banking decisions being made here, we're headquartered out of downtown St. Pete. It allows us to have a really close pulse on the process.
Yeah.
The local decisioning is huge because I don't have to, go and kind of bring this up the chain to 15 different people before it gets to
a guy in New York who doesn't understand the local business
or even the market or anything like that. I mean, we have our pipeline calls and we have, our committee meetings, and the president of the bank is right there. The chief credit officer is right there. The chief lending officer is right there. The president, everybody's in the room making basically conversation around these
a practical decision-making process.
So it makes the process faster. Now, do some take longer than others? Yeah. Not every deal is a slam dunk, and some require a little bit more time, a little bit more effort, understanding the repayment source, understanding all the different elements that makes a deal kind of bank, make it appropriate for the bank.
Yeah. I mean, what's the terms on these loans typically? Because like I said, we're 1 year terms. We are typically a bridge to stabilize to then go and try to procure, longer term financing. And Caleb and I have done that on multifamilies as well, where we've had to use hard money to stabilize the asset quickly, renovate, get the property under control. And then we were, looking to refinance to a product that your bank would offer as well.
Yeah. In terms of how we structure a majority of our deals, whether it's investment real estate or whether it's owner occupied real estate, it's typically what we do is a 5-year adjustable rate.
Nice.
So what we do is we structure it on a 5-year. We fixed it for 5 years. We price off the federal home loan rate, which is a little bit different than the treasury rate. That does cause sometimes an inverted yield for us. But we typically amortize it anywhere between 20 to 25 years. We'd like to keep it at 20. But we understand
5-year terms, 20, 25-year amortization.
Correct. Right. So, and with the ARM, the reason the bank likes to do it that way is because oftentimes if you do it and the balloon comes and maturity comes at 5 years, it's like kind of the borrower's like, hey, either pay us off or find a new bank or refinance it and start incurring all these charges. So that element is nice because we just take a look at the economic landscape, which you would have to do anyways if you were ballooning, and adjust the rate appropriately. We retain the customer. We have minimal costs because you're not having to get a new appraisal. You don't have to go through the loan closing process again.
You guys have the payment history, the 5 years.
Right, and we feel comfortable with the credit. And that does give us, obviously, the opportunity to keep a close pulse and a close touch with the borrower. We really do it every year as we review our relationships and annual reviews and that kind of a thing to make sure everything's kind of even keel.
So you were just talking about balloons, and you would get a lot of reports about $1.4 trillion in balloon commercial notes being due. How has that affected your deal flow? How does it affected you guys locally when this is happening on a national basis?
Yeah, I think Florida is poised to be a big part of that because this is especially Tampa is a growth market. So I think a lot of the opportunities that are going to be maturing in the next 12 months are going to be in Florida, and especially in Tampa. So, it's a great opportunity for commercial lending, right? Because they're ballooning, and if they've got a great CPA or they've got a great relationship with a commercial broker, those are the times where we have to be even more visible and reach out to those folks from a business development standpoint. And, sometimes
Sure.
it's timing. That's kind of the luck of the timing. But if you're not doing it every day, you're not going to get lucky, right?
Gotta be in the game.
Right. So I think it'll allow the bank, or our bank specifically, to be somewhat choosy about the opportunities that we bring on the books, because there's going to be a lot of qualified borrowers in that mix that are going to either have had a great experience with the incumbent bank, or maybe are looking to see what their options are, right? And that's all you can really do, is kind of say, hey, this is what our culture is at the bank. This is what we feel comfortable doing. We can get really aggressive on pricing because of the federal home loan rate.
Yeah. The local touch and feel makes a big difference too, from a borrower perspective. Because like I said, we've been borrowers as well of these community banks, and being local and having that touch and feel and understanding the underwriting process when you can communicate with an officer who's here locally.
Yeah. I mean, one of the things I love is I'll bring my chief lending officer on my calls with me. And so if I get his buy-in at that meeting, I mean, it's smooth sailing from there, because if he loves the deal on the onslaught, now it doesn't happen every time, but it's just their willingness to be a part of winning the business is huge for me.
Yeah.
Because it just shows that they are really, really a part of the process, and they understand, because they're not so far removed from the customer facing experience that they're jaded by the job role or the job title.
I was gonna say, that sounds like when you were even recapping the last year too, you guys went through like an adaptive period where you had to adjust to the changing market. We did the same thing. We had to change products and how we approach deals and how we're looking and underwriting. And when you get into these huge conglomerate banks, it's hard for these whales to move. These smaller businesses, the smaller outfits can make these pivots easier.
Yeah.
And then they can, we can be on the cutting edge and the front line of the changing markets and the loan products and how to make it work for the customers.
Yeah.
Because we really try to do the same thing on the hard money side.
Yeah, because BayFirst, clearly you guys care about the borrower itself.
Oh yeah, that's the number one focus is the customer. Now, obviously, we are always concerned about making sure the bank is in a good position.
Well, the bank goes down, you can't help a customer. That's what we say. It's like, we got to be alive, otherwise we can't help you.
We have to manage and mitigate our risk as best. It has to be at the forefront of our minds. But I think a good mix between that focus and the focus of being there for your borrowers, and creating a place for new prospective borrowers and depositors to feel like they truly have a banker. That's the big thing too, is, I don't know how many times I've asked a customer, I mean, like at a chamber meeting or some sort of event or a gal, whatever. I was like, well, who's your banker? And they're like, well, I don't know.
Yeah.
And I'm like, well, if any of my customers ever said that about me, I don't know. I'd feel really, really bad, because it should be like right instant. Like, this is my banker. This is who I call whenever I have an issue. And doesn't matter what the issue is. It might not even be something that I can help them with, but they know I'm the contact.
Yeah.
Right.
And having that assurance allows them to manage their business a little bit less stressful.
It's good. It's such a good point, because even there's a lot of, or we're seeing right now on the changing market, there's a lot of education also, and a lot of context that needs to be provided to, these borrowers are in the day-to-day grind of their business, right? They're focused on trying to become more profitable and succeed and in their business. They're not thinking about all of the lending restrictions and requirements that are changing in the market. And so having that liaison or that partner that can provide, and we're finding right now, it's a lot of contextualization and a lot of, hey, this is what's happening. This is what we're seeing in the market. We're not really looking at it this way. We're looking at it this way, and providing that education. And this is the data behind it. It's a lot of transparency too,
I mean, it's just a great resource to have. I mean, for any business owner to know that they have that availability to someone that they can ask the questions that they may not have historically felt comfortable asking, or maybe just didn't know where to ask or who to ask. And, I'm not saying I have all the answers, but I'll find them.
We're going to try to problem solve it together.
I'll try my best to find the answers for you. And I might learn something along the way myself. I mean, that's kind of
we are every day, right?
Getting acclimated to a bank, especially when you start out, it's kind of, you have to ask the questions, because you're not going to know who everybody is, what lines of business are involved. So,
but collectively, we're all providing a network.
Yeah,
and it's changing. It's a changing market. We're all having to stand on top of it as well.
Yeah.
So maybe this is not a negative question, but like from a default perspective, we hear this, like Caleb was mentioning, we hear like defaults could be coming, it could be coming. And of course, we've heard that for a couple of years now, right? And the can keeps getting pushed, but we are in a different economic environment right now when you look at interest rates, unemployment, the supply and demand factors. We're in a different place. And then we're reading more about commercial specifically being the more distressed sector of the market.
Yeah.
What are you seeing, and what's your take on that?
Yeah, I mean, listen, you can look at the economic reports and see that consumer spending is at an all-time high, right? We're in the middle of the holiday season. You can see that, people are still out there shopping.
Yep.
Money is a little bit harder to get these days for a lot of folks because they're spending it all on everyday items, groceries, and all those kinds of things. Talking about the credit portfolio and understanding your business and your business owners, that's a big part of it, right? Because we have to have a close touch with our borrowers on a quarterly, if not even monthly basis. So the way I try to take a look at it is, if I'm only touching my customers once a year, that's where some of these problems can arise. But what we're doing is we're meeting with our borrowers semi-monthly, certainly quarterly, and we understand their business, right? So if it's a distressed type of industry, we're talking to them a lot more, right? We're keeping an eye on their deposit accounts and saying, hey, how are we managing the cash cycle? And we start seeing things early, right? Instead of being reactive, the biggest thing for us is to be proactive in front of our customers.
I love that.
Letting them understand that you don't have to hide from us. If you're having a hard time managing your cash, or maybe customers are slow paying, let's figure it out together, right? Let's create an experience where we are truly your bank, right? And if I mentioned earlier, the cash flow issue, right? We were there for them. Now, we're not going to do that for every single borrower, but if we're touching our customers regularly, we're not going to be all of a sudden blown away like, oh my gosh, you're past due.
I had no idea.
You've submitted your annual financials and they're all over the place. So it's really just keeping a relationship with your borrowers. And you don't want it to be because you are hoping they don't fail. But the other part of that is you might see tremendous growth.
Right.
And it's like, hey, wait, let's how can we manage this growth
Or help you further? Yeah.
Well, because a lot of companies, their business owners aren't necessarily bankers, right? So they see this huge potential and they maybe grow too fast. And so sometimes that's where we got to come in and say, hey, let's not necessarily pump the brakes, but let's get a tighter grasp on the reins here to make sure that we don't position the company, or the company doesn't get positioned in a way that they run out of working capital, or they've got a line of credit that now has, a balance on it for 12, 24 months that's probably never going to get paid down. So we see that. So it's like, hey, how do we term that out? How do
create exit strategies?
Yes, just really understand the dynamics of the business and be in front of that borrower all the time. And that's going to be even more so critical going into 2024. I personally, we have this conversation all the time internally. It's like, hey, where do you see rates going? And I'm the optimist, right? I'm like, well, I see rates going down. And they're like, oh no, we're going to see rates go up one more time. Like,
six decreases.
I don't think so. So the other day when that came out, my boss called me up. He was like, man, you hit it. Yep. Yeah. But you never know. I mean, they may go up one more time. They may go up 2 more times. We don't really know until it happens. But I see rates starting to go back down.
Yeah.
In 2024. I don't think it's going to be a huge, drastic drop. I think it's going to be kind of a gradual drop the way the rates were, they were increased over the last 12 months.
But it will drive.
Yeah, and I think it's going to drive the real estate market too, because now folks that were maybe on the fence or have been on the fence for some time to borrow money and maybe didn't because the rates were too high, will be more inclined to say, hey, now we'll take a look. So you'll start to see real estate prices going up as well.
David and I talked about it in our podcast previously about how a lot of people are sitting on those 2% and 3% interest rates, 30-year mortgages, and they can't really move out into a new property even though they would like to. Yeah. So interest rates surely would drive behavior if they do drop. But one of the things you were talking about before, do you guys provide unsecured debt and unsecured loans as well as secured loans? Or
we can offer unsecured loans. We typically won't over $150,000.
Okay.
That's kind of our unsecured threshold. We don't do a lot of it though, to be honest. I mean, I mentioned the $60,000 that we did, but for the most part, I mean, we really try to stay away from it if we can, understanding that there's going to be some types of deals that we do. We're working on one right now where I've got, some borrowers that are looking to buy into a practice. They don't necessarily want to go through the SBA. They've been longtime customers of the bank. We've done a similar type of structure for them before, but essentially the loan is unsecured, right?
Yeah.
And those are about, I think it's $125,000 each. And they're buying in for, a small percentage of the company. But we're comfortable with those kinds because we've got a long track record also with the borrower. We feel really comfortable with them. They've been great customers of the bank. They've been great referral sources for the bank. I've referred, business to them. They've taken care of all the clients that I've sent to them. I mean, some of them have been there with them now for like 7 years.
Wow.
So, we feel really good with them. And, for those kinds of opportunities, we'll
Really
definitely
goes towards
explore
like building the relationship with your banker and your lender. It's so critical to success for the borrowers
100%.
as well.
For sure. But in our position, sometimes, the exciting part is some of the creative deals we get to be a part of.
Yeah. those are
Sitting in
fun.
the seat, it's a lot of times we get to push a lot of paper and create those relationships. But what exciting deals have you put together? Things that people, wouldn't really know in the public, like, oh, this deal got done by BayFirst or.
Yeah, there's been a couple. There's been a couple of deals that I was like, man, this is kind of a fun one to be a part of. I've got a customer of mine that opened up a restaurant, and we did that deal last year. And he's just a really interesting guy. I mean, you could talk to this guy for hours, and so maybe it wasn't so much the dynamic of the deal, but the people that you meet through the process. And he's just been absolute. And I just had lunch with him the other day, and I'm like, I literally could just talk to this guy for hours and just pick his brain. He's a guy from Italy, has done a ton of deals in and out of Miami and Tampa. And I wish we could do more deals with him, and I think we will. But he's just one of those really interesting characters. So that would be one that sticks out. I remember this one deal that I did way back. This is probably going back to when I was in Charlotte, and the company manufactured the backpacks that go on firefighters.
Oh, nice.
Something you don't really think about, right?
Okay.
And so I went out to the meeting, and they're showing me how it's made, and the kind of, they show how they're heat resistant, because they also make the non-flammable piece of their outfit or whatever you want to call it.
Yep.
And so watching all that being made was just really, really neat.
Yeah. Getting brought into the process.
A deal that we did this year at BayFirst, this company, they manufacture chiropractic tables.
Okay.
And so something, again, that, you go to the chiropractor, you see the table, and you're like, oh, whatever, you don't think that much of it. And then you get there, and I'm like, you got guys in the corner in their office, like putting together components, right? And so we helped this particular company with some working capital, because what they were having an issue with was when they were ordering motherboards for the electrical components, sometimes they would have to wait like 60 days, sometimes 3 months for a bid to come back, not necessarily for the product.
Wow.
And he was like, how can I find some equipment to just do this in-house and compete, not only compete with them, but cut my timing in half. So that was a really neat one, because you kind of got to see the assembly line from like bolts and nuts to finished product.
Yeah.
And it was
really inside the businesses too, and really seeing
man.
helping them make business decisions.
Yeah. So we were really successful in helping them do that, acquire some equipment. We got them some working capital. And they were just, they were thrilled to have that now as a part of their business.
That's awesome. What's your most popular loan product in the last, 6 months?
We love the owner-occupied stuff, but we see a lot more investment real estate. So we love real estate. Real estate is a good, especially if it's in our own backyard.
I think we all share that in common.
Yeah, that's definitely.
We all love real estate.
Yeah, it's real estate. I love working real estate deals. I've done obviously, more owner-occupied stuff than I have investment stuff. But
so on the real estate deals, to stay there for a second, what's the products that, just for our audience, what are the products that, we've talked about, growing their business, equity partnership buyouts, some equipment, purchasing. Is there a common thread there, or what's the most popular one?
Yeah, so
what should they know?
Typically, we start with looking at the real estate. That's really where most of the deals start with us when we
First
get them.
position mortgages only?
Yeah, first. Yep. And we have done some second positions, but typically we already hold the first mortgage note.
Gotcha.
And where that'll happen typically is if we've got an evergreen line of credit that maybe has had, a balance that's been ongoing for 12 or 24 months. And we talk to the borrower and say, hey, we don't see where this balance is really going down. It's not necessarily going up. I was like, but you're kind of bumping up against your max.
Yeah.
What's the plan on, bringing that down? And sometimes like, hey, these have kind of turned into evergreen funds. And so we'll term that out. Typically, if there's equity in the building, we'll tag it onto the real estate. But the conversations typically start around real estate. And honestly, we like it that way.
Yeah.
It's hard to form a relationship if a borrower comes to us and says, hey, we need a line of credit. And then we ask, well, where's your mortgages? Where's your deposits? And like, oh, it's in another bank and we've got a 2% rate. We're not going to move it anytime soon. I'm like, well, why aren't you talking to them about the line of credit?
Yeah.
Right.
And sometimes the bank just doesn't understand, or maybe they don't want to go into that type of loan product with them, or maybe there's an underlying reason that you uncover as you go through the process. But we typically start, I think, on the real estate side mostly. We'll offer the lines of credit.
You mentioned the like other banks, because we've learned this too, because we have one bank that holds the most of our depositories, but then we've sought out loans and different accounts, and it's not something that most people know, I think. So the banks, they like to have the depository accounts, right?
Yeah.
Could you kind of explain that for our audience, like how that works when you're going for financing and what banks like to look for?
And how advantageous it is for the bank to have it.
It goes back to the relationship piece, right? We don't want to make it to like, hey, you have to bring over your deposit accounts as a mandate to get this loan.
Yep.
But where we find the disconnect is if you're coming to us with these financing needs and we're taking the time to understand your business and provide a solution to you that will allow you to access either working capital or find a way to refinance or buy a new building, let's build the relationship, right? And if we're only doing the loan, that's when it becomes transactional.
So commitment.
Yeah, it's kind of on both sides of the table.
So true.
And also, when we have the whole relationship and we're managing that relationship, it allows us to keep a close pulse on the cash cycle.
Like you were talking about seeing their deposit, you can kind of see the trouble before it happens. It's so true.
If you start seeing them, on the past due quite a bit, which you wouldn't see if their banks or, if their accounts were somewhere else, or if the account's just constantly in the negative. It's kind of like, hey, what's going on? Let's have a meeting. Let's talk about it.
Yeah.
But I think the biggest thing is kind of confidence on both sides of the table. Like, hey, we're willing to, give you access to this debt. But we want access to the deposits as well. And a big part of that too is as a community bank, we like to lend on the deposit dollars that we have, right? It's cheaper for us to do that. And if we're only lending and not really building the deposit side of the bank, then essentially we could be paying more for the money that we're, dishing out.
Yeah.
Excuse me.
No, all good. So then you were talking a little bit before about cash flow.
Yeah.
How heavily are you guys on the cash flow, or are you more loan to value driven?
Definitely cash flow is the number one driver for us. Loan to value is going to be, a part of it as well. On owner occupied stuff, we like to be about 80%. On the investment real estate, we like to be 65 to 75%. Okay. And to be honest, I haven't bumped up against a lot of loan to value issues, at least this past year.
Even with cash flow,
even with real estate, kind of the values going down a little bit. My referral partners, my COIs, my centers of influence, they know the box that I play in, so they're not going to send me that stuff either. So maybe that's why I don't see a lot of it.
Yeah.
And having that relationship with them kind of helps me not spend my time on something that's not going to get done.
Yeah, it's tough too. Like even on we're not commercial experts, Caleb and I specifically, and so when we're trying to evaluate commercial properties, we can lean towards appraisers, and we do not use appraisals on single family residences or multifamily or anything like that. When we step in the commercial realm, we do look at appraisals as an additional source to try to come up with a value. We're also looking at the cash flow. One thing we've noticed is that it's difficult to value these commercial assets right now from a loan to value perspective, because what is the value? Well, the cash flow drives the value a lot of times. Right. And what's your take on that as far as like valuing commercial assets?
So, certainly on income producing properties, that's a big component, right? You have to understand, the rental revenue that's coming in, the rental
cap
potential.
Rates.
We lean on a lot of third party reports like CoStar to understand what's going on in the market around. What are the market rents? Are they above? Are they below? Are they right on par?
Yep.
And when you kind of take that information and you couple it with an appraisal, appraisals, I love appraisals because they just have so much information.
Data. Yeah.
It's just, I mean, when I get a deal and there's an appraisal from another bank, now I can't use it, but it's there. I can pull so much information, create my credit package for our underwriters to look at with a lot more context, a lot more
For
substance.
sure.
And then when we order our appraisal, typically they're just piggybacking off of the previous appraisal anyways.
Yeah.
But it allows us to, kind of get our foot a little bit farther along the path right on the start.
On the front end versus waiting for this
And
appraisal to come
there's
back.
different kinds of appraisals, right? Are we looking at a fee simple? Are we looking at a sales approach, just the brick and mortar? Are we looking at
Cost
it from
replacement.
Yeah, exactly. So all of those things come into play. But yeah, I mean, the appraisal piece, after 2008, it's different for the banks. We can't talk to the appraisers. We don't talk to the appraisers.
There's a lot of walls.
Yeah. And I mean, I kind of like it. Sometimes it creates an issue if you're in a time sensitive type of situation.
Yeah.
So you believe that's improved the accuracy of appraisals, being that there are more?
I think so. I think it's created accountability more than anything. It's created a fair playing ground from what happened in 2007, 2008. It creates a buffer to kind of make sure that, that doesn't happen again. So yeah, I mean, I think it's been helpful. I think it's been beneficial.
Yeah, no, that's a really good take on that. It's funny because like on residential appraisals specifically, like more in our wheelhouse, we've been disagreeing with a lot of values too.
Yep.
On single family residential assets.
Yeah.
And you can see, that's why I like when you said that when we read the appraisals again, we're looking at the data,
Yep.
we're comparing our evaluation to that, but they can, when they don't have the liability of the actual cash or capital loss in a worst case scenario, the liability missing for me at times is like they're willing to err on the side of aggression versus caution.
Right.
Sometimes is what we've seen. So, anyways.
Right. Well, you were talking a little bit about what you're not seeing, but what are you seeing in the market that could be a caveat for people trying to apply with you guys?
Yeah, I mean, certainly the rate environment has been volatile. I think cash is still in motion. There's still people out there that are looking to do business. You have to look a little bit harder for it than maybe you did before. And it's honestly just keeping a close pulse in relationship with your referral sources, right? And having that transparency of what you can or can't do. I'm on LoopNet all the time. I mean, I'm on LoopNet all the time. And just to kind of see what's coming up, what's staying on the market. I think that going into 2024, you're going to start seeing a lot of people that are going to need access to working capital.
Yeah.
Naturally, because we've had spending has been pretty high. When rates start and hopefully, start to drop, you'll start seeing more owner occupied or even investment real estates come across.
Yeah.
But really for me, this is the time of year that I'm having the conversation, really the last quarter, having conversations with the borrowers and understanding what are your CapEx needs for 2024. If you've got a budget, if you don't have a budget, we need to have a conversation about that.
Right.
But most customers, they have a budget going into 2024 and really understanding what their expenditures are going to be. What are their fixed costs? How have they increased over the last 12 months? How do you see them potentially increasing over the next 24 months? And then how is the business positioned, especially in a growth market, to sustain that growth?
That's amazing that you guys are doing that as a banking partner, like real hands-on approach where you're truly a partner in these types of deals. So that's really cool to see.
Yeah. I mean, it means your phone rings,
Yeah.
sometimes on Saturday and sometimes on Sunday, but I've got a great support with my bank and they love to see the transparency and the visibility that we have in the market. So
yeah.
having that support's big.
I know personally you have been a big advocate in the Latin community. I wanted to talk a little bit about that.
Yeah.
And that you being on a lot of the chambers and locally in the Tampa Bay area. But what has been your approach with helping the Latin community with finance?
Yeah. So, going back to, it was like 2018 or maybe 2017, I was working as a market president for a bank called Axiom. And that was right around the time that Puerto Rico was getting really, really hit with a lot of, really bad storms.
Yeah, a couple hurricanes in a row.
Yeah, I had a lot of family there, still have quite a bit of family there. And I started, kind of working with some of the nonprofit organizations in the area to try to understand how can we help? How can we be a part of it? And so what that ultimately ended up happening was we worked with some of these organizations to help provide food and water and generators, and it was basically just chartering private planes to go back and forth with materials, and sometimes bringing back people that just had no more home.
Wow.
So that kind of led into some of the appearances that I had on a couple of Spanish radio stations, just really talking about, you know, the differences in managing your finances in Puerto Rico. How do they, you know, can they feel overwhelmed coming to the States and maybe not understanding or not knowing how to create a bank account or savings?
Yeah.
So a lot of those interviews were around helping customers understand the process, right?
Yeah.
What's needed to opening up a checking account, savings account. But the big part was, how do you budget? And for me, when I was younger, I was an envelope guy, right? I had an envelope for every single thing I needed. I was like, I got my rent envelope, I've got my car note envelope, I've got all these different envelopes. And when I would work, I would, you know, if I was either waiting tables in college or whatever I was doing, I would put the money in the different envelopes. And it was really,
awesome.
I mean, it created, you know, some financial awareness for me. So I've kind of preached that to different folks, and it doesn't have to be an envelope, but the main point is understand what you're bringing in, but understand why you're bringing it in. You're bringing it in to pay different things, to live. And, you know, the biggest thing is save first. You know, make sure you have money saved, because if you don't have money saved, you have money lost. And I think for a lot of folks that resonates when they get into a financial crunch and they need access to money and they know they got it, you know, and sometimes that's hard because you've saved that money. Like, I don't want to use it. You know, I don't want to use it. I want to start over, but it's good to have it. And at least you have it. So that was a big thing in helping, you know, the Spanish community. And then most recently I had some board of director appointments that have expired. And so I started looking at, you know, what I wanted to do from a board standpoint. And I was approached to join the board for the Tampa Bay Latin Chamber. It's a young chamber. It's about 4 years old. But man, what a great group of people. I have just enjoyed every minute of it. They didn't have a finance committee yet. So I basically joined to create that finance committee, establish an operating budget for the chamber, and then create some awareness. We have great events. I'll have to invite you guys to some of those.
Yeah, that'd be great.
We have a Café con Conexiones that's just basically, you're going to get all hyped up on Café con Leche. It's great.
Caleb, say that 3 times fast, please.
I could not. Tony, I won't butcher that.
But we have all kinds of different, you know, events going on that it's just great to be a part of it.
Yeah,
that's awesome.
What would you say some of the top initiatives for 2024 they're going to do with that chamber?
Yeah, so certainly creating the finance committee is going to be big.
Okay.
The operating budget, the visibility is huge for us. That's probably why we have all the events that we do, is just to be out in the market a little bit more.
Okay.
So, you know, bringing awareness to the chamber is going to be big. Increasing the membership is going to be a big component of that. And really finding ways to penetrate the market, right? But penetrate it the right way from a standpoint of having a direct initiative around what we want to do and how we want to do it, and kind of acting on that, right? It's different to just say, hey, we want to do all these wonderful things, and then you're just kind of stuck in a meeting like, well, how do we do it? No one knows how to do it.
Yeah, logistically, you got to actually put this thing together.
Sometimes you just have to take that leap and say, hey, if everybody's on the same page, we all want the same thing, we're all willing to work for it, then it'll happen.
Yeah, and backed by action.
Yeah.
I love that. I love that. Anything you want to leave our audience with today, as far as, you know, we were going to ask you some questions around, you know, if you're a young aspiring entrepreneur and you want to get into lending or commercial lending, what would you say to somebody?
Yeah, if you're interested in getting into banking, you know, I would say that the best thing you can do is find a great mentor. Find a great mentor. I've been fortunate to have great bosses, great leaders, and I've also been in a situation where I had terrible ones. And for me, you know, I fundamentally what I want to do with my career is I want to be the president of a bank one day. And I want to do that because I love helping people, and I want to help lead people and mentor people. Some of the best gratification that I get is when I've mentored someone, I see their success, and I'm not taking a part of that success, but it feels good to know that you helped, even if it was just a little bit.
Might have gotten a little assist on that.
You know, interestingly enough, what I've gotten more from the bad leaders and the bad bosses than I've gotten from the great ones.
Because you know what not to be.
We talk about that a lot.
Yeah,
No,
it's-
yeah, it's
You know
so
what
true.
to stay away
We've
from.
been down those roads.
And you know, that was a hard lesson learned on my part because it was a lot of sleepless nights and moments where I'm like, man, I don't want to go to work tomorrow. I don't want to talk to this person. But at the end of the day, it does help grow you as an individual. But yeah, find a good mentor, find a great bank, and make sure that your personality and your initiatives are in line with that culture and that bank. Because if you're not happy where you're at, doesn't mean that the place is bad. It doesn't mean you're a bad banker. It just means that it's not a good fit. And sometimes that means you have to move around a little bit and you have to be nimble. Sometimes it's stepping out of your comfort zone to say, hey, maybe I don't like all of the things, but I see potential here. And I'll tell you, I truly found a great home at BayFirst. I don't think
That's
I've ever
awesome.
worked for a better bank, a better group of management. I just, everybody there is so supportive. And I want to help grow that bank as best I can.
Awesome answer. Couldn't even add to that. That's brilliant, man. Thank you so much for
No,
joining
thank you
us
for having
today.
me.
It was great. And where can everybody find you? You got an Instagram handle or where,
Yeah,
where
you
you
know,
at?
social media page. I don't do too much on social media, but certainly, you know, happy to reach out. I can share my contact
Maybe your email.
information.
You want to
Yeah.
give your email
It's
out?
Kristian.Negroni at BayFirst Financial.
Awesome.
And it's
We'll link it
Kristian with a
below.
K and Negroni like the drink.
We will link it in the bio as well. Make sure everybody can reach you. Thank you so much, man. It's been great
Kristian,
today.
thank you for having us.
Yeah,
Well,
man.
having you.
Yeah.
All right, man.
Yeah.
Thank you.
Thanks.
All right. Thanks for joining us today with How to Make Money with Hard Money. Like, subscribe, and follow us on all social media platforms at DKC Lending.